Well, good morning, traders. Today is Tuesday, November the 29th at approximately 9 a.m. Eastern Standard Time. And I have not done an update in probably 3.5, nearly 4 weeks now. I do apologize for that. Unfortunately, or fortunately from my perspective, projects have been picking up with my real job that actually earns me money, unlike crypto lately. And so that, of course, has become priority in my life. And of course, we've had Thanksgiving breaks and all sorts of other events, life events that have just taken priority. And so this video production thing has kind of taken a back seat. And it's also just kind of the right time to take a back seat. There's not much trading we can do when the price of most crypto is just going sideways. I mean, you can do day trading for sure, but that is not what the focus of this channel is and has ever been. We are more about swing trading. So we're looking at least 2 weeks in the future, sometimes months in the future. And that's more of a swing trade type of scenario. And of course, with recent events, I'm sure none of you could have possibly ignored the FTX fiasco and all that was, even if you are not watching or intentionally reading news articles, business articles, etc., it has probably come up in some space that you are involved in on your social media feeds, etc. And of course, talk about FTX is never complete without a talk about its owner and runner, the one and only Sam Bankman-Fried. That's not his real name. Sam Bankman-Fried is his real name. And you've probably heard tossed around the effective altruism umbrella that he campaigned under. Really, in my opinion, is not much more than a marketing gimmick. It is the same tactic that politicians use all the time. It doesn't matter where you are in the world, your politician probably makes promises that they either A, cannot keep, or B, will not keep. And that is how they aim to win their particular campaign. And speaking of campaigns, it is now known that Scam Bankman-Fried fraud donated $70 million to political campaigns, specifically of one particular party here in the U.S., weeks before filing for bankruptcy. So that puts his grand total over $100 million to this particular party. And this particular party doesn't really like the tenets or philosophy that decentralized or DeFi crypto was founded upon. Overall, I'm speaking. I'm not saying everybody. So it's kind of ironic, unless it's not. Unless you might understand the bigger picture, which it's hard for me to say that I do. I really don't. There's so much confusion in this world after the events of 2020 that I quite honestly am happy to admit I don't know what is going on. I have no clue what is going on. Anyways, we're not here to talk about Sam Bankman-Fried or FTX and all that was regarding that. Of course, we know that it has greatly impacted the crypto market. So we will take a look at the disparity now between U.S. markets and crypto. And I have been calling for a blow-off top in the stock markets for quite some time now, several months at least, probably about 6 months, and it looks like it has begun. I was hoping, and actually quite honestly expecting, crypto to follow that movement up, and right on cue it seems the FTX fiasco occurred, bringing crypto down with it. And so there is now a great disparity in price where U.S. markets have gone up and crypto has gone down. The hat, by the way, I have bedhead. I haven't gone to the barber in several months. I've kind of let myself go here, so that's why I prefer just to throw on a hat. In this case, the beanie was the first thing that I could grab. All right, enough said about all of that. There is plenty. There is an overwhelming amount of data that can be tracked and followed regarding FTX and SBF. And one needs no more than to follow the money trails than to understand what that whole Ponzi scheme was about and what the ill intent of Sam Bankman-Fried really was. Of course, traversing or traveling under the umbrella of effective altruism. Again, in my opinion, nothing more than a marketing tactic for business owners and CEOs, etc., etc. Lest I become too cynical, let's jump into the charts here and just cover what I am seeing on our charts. We only have 20 minutes, as always, with the TradingView people, so I want to get in as much as I can so you don't have to jump over to my other channels to get the rest of the video. All right, transitioning here, and here we are, guys. We have the dollar chart. I have drawn a level here. I'm not sure if you can see this. Oh, by the way, guys, I did try to create several videos. That's why I have this here before this video this morning. And most of them I am just attempting to find a way to stream this video on TradingView without it taxing my GPU too greatly. But in almost all the cases, I just was not able to, I wasn't happy with the quality of the video after it was streamed, so I deleted it. And the other thing that I'm having problems with, excuse me, many times is drawing on these charts. It just, because my GPU is taxed so greatly, I can't write and draw like I like to do, and that just throws me off. So here we are today on the dollar, where that circle is. I can zoom in here a little bit, and it's nice to be able to do this rapidly versus the other videos that I've deleted. Just, it was horrible. So I'm just going to continue doing this the old-fashioned way, and if I run out of time for TradingView people, I do apologize for that, but you'll have to catch me over at my website, which is, or one of my websites, which it can be found here. Those are my social media channels, and my website is, I don't know if you can read that or if it's backward. It is backwards, stewdom.us. All right, so the dollar continues to fall, you know, like off a cliff type of fall, and I expect it will continue. You know, guys, if you're no stranger to my videos, you know I've been calling for a top here on the dollar. We hit this red trend line, which if I zoom out here, and I can do that, that starts way back in, I believe, 2009. Yeah, that's where I started it, March of 2009. And what is significant about this is, as long as we remain under this trend line, we have also at the same time remained in a secular bull run. What is a secular bull run? It's a longer term time frame of describing the market action. So since 2009, the market has been doing nothing but going up, up, up. all right? And we have touched this trend line. This is the dollar trend line once, twice, and now just recently the third time, and hit our heads on that. And something like that, you just don't break through straight away. It's going to take some time, some hammering away at that if we were to go higher. I don't believe we will, though. I believe very shortly, as you all know, the Fed is going to start to reduce rate hikes or even possibly pause. And that is because of all the disinflationary data that is coming in hot and heavy. We will talk about that as well in this video. And I can already tell that TradingView people, we're going to run out of time. So I'll do some technical analysis here real quick. You can catch the rest of this video over at my website or on YouTube. The dollar continues to decline and has made, is that actually, that may not be, no, that can't be a new candle here. I'm just seeing that wrong. Sorry, guys. This is where we're at. So this is where we're at. Dollar has broken to the upside of this descending trend line. That makes total sense because it is using that 200-day moving average as support, and you would expect a bounce there. You wouldn't expect us to go straight through. That typically does not happen unless there's some big news. So we are bouncing, and that is in perfect inverse correlation with the US 500, which is the S&P 500, hitting our heads against the 200-day moving average, all right, and now coming down. We don't, again, expect us just to move straight through that. That is something that rarely ever happens unless there's some big or colossal news. And that is not the case thus far. So we have hit our heads on that, and I expect us to come down to probably the 100-day moving average, which looks like it is in correlation with this trend line that I've drawn. Good area of confluence there, at which point we can use that as strong support and continue our upward trend and take another stab at breaking through this 200-day along with this trend line, which is coming down and has come down since November of last year. And there you can see my W pattern, which I drew out. If I zoom out further, I want to show you this again just for review. I have an Elliott wave, 5 waves here on a longer time frame. We started this back in 2018. This is wave number 1. COVID was our drop and created wave number 2. Wave number 3 tends to be longer and more extended. It certainly was from the time of our bottom in March of 2020 to our top in November of last year. That created this whole wave number 3. And then we have wave number 4, which is a which has been created here. I'm not an Elliott wave technician by any means. I understand just the basics of it, and I know that within each of these waves you have different various other waves which can be drawn out and measured. I've never really seen a great Elliott wave technician. If you guys know of any for me to follow, please post those in the comments. They all tend to be great after the price action has taken place, but typically not before. At any rate, I called for a bottom here or support. I didn't call for a bottom. I did say this is going to be strong support, and we are in trouble if we break this 3580, which I have drawn out. And you can see we hit that perfectly several times on the SP or US 500, S&P 500. In this case, the US 500 is what I'm tracking. And we bounced. We could not break through it. We had a wick below right here. Do I still have the pen on? Yes. So we had that wick below, but the body came up that same day, and we rested on that level here at 3580, using that as support really for a couple weeks, and then started to bounce and project upwards. All right. And so delete that stuff. That is where we're at with the S&P 500. We are starting to form or follow this Elliott wave pattern, and I expect wave 5, zooming out again, to be longer and more extended, just like wave 3. This will take maybe a year and a half before we hit our highs. Around, my projection is anywhere from 5 to 6,000. So yes, we will beat the previous high, and then after that is where, again, the lagging effect of this disinflationary data will most certainly start to affect companies first. And as companies have to reduce costs, of course, labor is going to start to become a part of that, and that's when unemployment rises. All right, so this is all we're tracking the lag effect here. We have to do that to see with better clarity into the future, and so that's my in a nutshell, my overall projected forecast here. All right, so guys, stay tuned for that as I track that over the next several months and year. And I will do that. I may not be as much of a trader during these times. Speaking of trading, let's just add here quickly. Excuse me. I'm sorry, guys. Bitcoin. And I'm going to show you here what I'm talking about when we talk about the inverse relationship right now. Typically, we're very close. You know, what happens in the markets tends to be what crypto follows. So during this upward trend, of course, we had two peaks here. On crypto, the crypto is the orange line. This is Bitcoin, actually. Bitcoin all-time price index. And Bitcoin peaked just shortly before the U.S. markets peaked. All right. So as the U.S. markets went up, so did Bitcoin. As the U.S. markets came down, so did Bitcoin. Now, here's where we get into the disparity. Really, it didn't happen until we heard the FTX news. That did not affect the S&P, in this case, is what we're looking at. But it did affect, of course, Bitcoin. And so that's where we have our separation of ways in terms of price action. Whereas the U.S. markets continue to go up and fulfill this blow-off top that I'm talking about, all right? As they continue to fulfill that prophecy, I might as well use that term since my user handle is Studamus. As we continue to fulfill that prophecy, what I missed in prophesying is this whole FTX fiasco. Now, I will say this. I had red flags all along with SBF as he continued to tout his altruistic efforts in changing the world. And whenever you see somebody, anybody, doesn't matter who it is, scientist, philosopher, politician, businessman, etc., stating that their particular technology, policy, governance, etc., their money is going to change the world, or they want to change the world, know this. It probably is not going to work. And in fact, more than that, it red flags should go up. It may signify this person either A, blatantly does not understand the way life works, or B, is in fact malicious or of ill intent, a malevolent, misanthropic individual that is hell-bent on the destruction of one system or another. And certainly we see that many times. All right, so TradingView people, we're going to continue to talk about disinflationary data. We're going to go over some technical analysis on the crypto space. We're going to do some of these things in the remainder of this video. So if you want to catch the rest of that, head on over to my channel at studom.us, or you can find me on YouTube, any social media channel. Until then, we will see you all later. Let me just, for the rest of you, stop this video. And I've got to pause it here. And then we'll just jump over to a new tab and finish this off. All right, so we were talking about the disparity between the S&P and Bitcoin, which is not up here currently. That's all right. We don't need it up there. You guys get the point. And you've also seen my larger projection. And this time frame, guys, again, is more than a swing trade. This is my longer term trajectory prediction, which really just helps us better navigate our trading space and investment portfolios. If we can understand a longer term time frame, we can better prepare ourselves, obviously, to make the best of the investments possible. So with the stock markets, I expect us to bounce around here for December-ish time frame before we start to make new highs in January through March, really. And then we're off to the races. We're going to start to tackle our previous high last November, in November of 21. And hopefully by that time, crypto, and I say hopefully because I didn't see the disparity in price coming between crypto and the markets, but hopefully we see enough bulls come in, enough institutional investors, possibly some regulation which would help encourage or foster confidence into the crypto space by institutional investors, and we kind of need that for the price to continue to rise. For the time being, guys, I was getting into this. I have offloaded most of my crypto from exchanges because I just don't trust them for obvious reasons, and have turned those cryptos into long-term hodls. I put them on the chain via hard wallet, soft wallet, and that's where I'm just going to store them and hodl until things start to look better. The additional recommendation, I've always made the recommendation that you don't just utilize one exchange, that you segregate, separate, and utilize many different exchanges along with many different cryptos for your investment, along with many different wallets for your long-term hodls. The point is never hold all of your eggs in one basket. If you do that, let's say you had all your crypto into FTX, dude, I feel so bad for you. But let FTX be a lesson. It's not probably going to be the first exchange that failed. Actually, Mt. Gox was the first exchange, so it's probably not going to be the last. And Tether is one of those stablecoin currencies that if it gets audited, in my opinion, it will be another disaster for crypto, because I certainly feel they do not have the backing they claim they have. All right, so be aware of utilizing USDT, Tether, for your stablecoin. I would prefer USDC if you're going to use a stablecoin. But, I mean, if you're tracking Bitcoin prices, Bitcoin holds solid. I mean, this is a remarkable strength during this devastating time that Bitcoin has exemplified. And so Bitcoin is also a way I would use that as a safer, it isn't a stable coin, but you could use it as a way of trading rather than using a stable coin. All right, so my two pieces of advice is be careful of exchanges and try not to use USDT as much as possible. Okay, moving on here. We skipped over the VIX, so let's just cover that real quick. All right, the VIX continues to drop like a hot rock. All right, So we had an update yesterday, which is this little green candle. All right, and that was expected because, of course, S&P hit its head against that 200-day moving average, and the dollar used the 200-day moving average as support, meaning that when the dollar goes up, VIX generally also goes up because the dollar is going up so drastically. It doesn't always flow in correlation like that, but lately it has. And when the dollar and the VIX is up, the markets are down. All right, so this is perfectly in correlation with all the data that we've been seeing recently. Now, I did say that I didn't expect us to bust right through this 21 level, and I really don't. I mean, we'll come back down to that again and maybe rest on that for some time. It's possible that we see a lot of sideways action here on the VIX, which generally, if we look at these charts historically, doesn't take place all the time. You know, the VIX is one of those charts that moves up and down pretty rapidly. And you can see that here denoted with these various different spikes. All right, those are fear spikes. And it's been a minute since we've been down to this level on the fear index. Really, we were there once in April of 22, and we were here again in August of this year. And here we are again. Now, it is my hope that we continue to break this. Really, this black level is where all the action, the predominant majority of price action takes place. But if we can see this level being broken and come to the downside even further, that is great for the markets. And if that happens in correlation with the dollar coming down below its level, I forgot to mention 103 is a big level there. And if we can see the dollar, you know, first it's probably going to go back up and maybe bang its head on that 100-day moving average. This is the purple line here. And if we can see the dollar test that, then come back down and hit this 103 level before breaking lower, that is an extremely preferable price action. Struggling for the word there. All right, so VIX would follow that. If the VIX, does that sort of price action, we come up here and test the underside of this megaphone pattern and come back down, test this 20 support before we break lower, just like the dollar. That is how I expect it to go. Then the market would follow with that sort of pattern on the upside. And hopefully, eventually, tagging or breaking this trend line here. All right, this downward trend line that we have been in since November of last year. Okay, enough about the VIX, the dollar, and the stock markets. Let's talk about some other indicators that are showing me that this move upward in the U.S. markets is coming. And the reason why I'm covering this for you crypto people is I am hoping, though I can't say it will be the case, but I am hoping eventually crypto will see the bulls out in full force in our stock markets and will follow that trend as institutional investors maybe start to dip their toes back into the crypto space following regulation, maybe an audit on exchanges, audit on Tether, etc., etc. So we have to watch that news as well. Okay, let's where should I start here? Well, we'll just continue down in my chart. US 10-year turning over, very good sign, an indication of what might be to come for the Fed, future Fed decisions. We like to see this if we're expecting rate pauses, rate decreases, or more than that. All right, so we like to see a turnover in the US 10-year. And we like to see a turnover in the US 2-year as well. And right now, what do I see immediately? I haven't studied these charts or looked at these charts, but you guys can see that, right? Looks like we're forming a small head and shoulders pattern there. Let me move that out of the way. All right, so if that breaks, that neckline breaks, we're coming down to this 100-day moving average. And that is also further indication that the Fed will at least decrease the next rate hike, possibly pause. This chart is telling us that. That's what the chart is telling us, all right? Not saying that's going to happen for sure, but this is the benefit of doing technical analysis. You can always, not always, you can often read the news before it happens, and that's not always the case, but it is just another tool that we utilize or we put in our back pocket for these types of scenarios. All right, and this chart is something, all right, that doesn't have all the data on here right now, so because of that, I'm going to jump over to another tab here. This is something I posted over a month ago. All right, this is our housing market. All right, so I'm wondering why. Let me do a hard refresh here and see if all this data comes up, because I'm not getting all the data. Here we go. Yeah, that's better. Loading. This is the United States Housing Market Index. All right. So in the green zone here, that is when the market is hot and doing well. In the red zone here, that's when we, so for instance, right here is when we had our housing market crisis starting in 2007, 2008, 2009. The reason why I want to look at this historical data is because it shows us what the Fed did and what the market price action was in relationship to the housing market data. All right. So last time, and we'll just take last time as an example, we proceeded to poke through this weakening zone of demand in the housing market. And you can see that coincided with an oversold market down here on the RSI. All right. That's when the housing market crisis began. That's when there was recognized weakness in certain city markets. The main one that I remember first of all being Detroit. And that's when we had the bailout of all the car companies because they couldn't meet, they were going to go bankrupt, basically. And so the government decided to bail them out. They were too big to fail, whatever. And this is about the time that we experienced the beginning of our housing market crisis. So what did the Fed do as soon as we dipped below? Well, the Fed was continuing to raise rates. In fact, they didn't pause until 2 months after we entered into this red area in the housing market. And then they paused for a full year and didn't actually begin reducing rates until 14 months after we were well into housing market recession. And the housing market leads the economy, guys. Here in the U.S. it does. So we have to be cognizant of this. So here we are again, fast forward to September of 2022. We have poked through this weakening demand. Haven't done that since we started this in 2007. So here we are again. We've poked through this, and we are recognizing weakness in certain city markets where it's beginning. We're seeing reports in Phoenix, Las Vegas, Austin, etc., of a weakening demand in the housing market. Now, when I drew this chart, we were right here where this red circle exists, and now we're currently right here. All right. Now, this is also September, October, November, a full 2 months after we have dipped below this demand zone. And so now, what is the Fed going to do? Are they going to replicate what they did in 2007, 2008? and begin to lighten rate or decrease rate in hikes, or will they even possibly pause? So the Fed rates is here in orange, and it's hard to see where we're at. Okay, so let me zoom out. Right here. All right, I'm going to circle this. This is where the Fed is at right now. All right, and we're almost a full 2 months outside of dipping below this weakening demand zone. So in that instance, I can if history repeats, we can say that the Fed pause or rate decreases are coming very soon, and they're already hinting at that, in fact. So they're hinting at rate, significantly slowing down rate hikes, but I believe that even in the future, a pause will come. All right, and now that pause, they may not decrease rates again. Like, look, it took a full year in 2007 through 2008 before they actually this started in 2006. All right, through 2007 they didn't start to decrease until 2007. So it may take a full year before the Fed even makes any move after that. But by then it's too late. And so all of this lagging data will come into play, the housing market especially. And I do expect that down the road, after we have our blow off top in the markets, that lagging data of housing market demand will come into play, and it will drag these markets down even further. And then at that point, the Fed has some elbow room, because they have increased these rates, to start quantitative easing again. And that is when the markets typically continue down. Let's just take a look here. I have the Dow up here in this blue. So what happened when the Fed was continuing to raise rates and they paused, and all during this time, this year after, the Dow was making new highs, even though the housing market was pointing down and continued to move down, and we were below this line here, which indicates we're in oversold territory on the housing market, oversold territory. So we were deep into bear territory in the housing market, and yet the Dow Jones Industrial Average continued to move on and upwards into new highs before we had the big collapse, and we had all the loan crisis and collapse of I can't even think of the exchange or the big bank that collapsed. It's been a while, but anyways, we had bank collapses and bank bailouts, etc., etc. And once we had the banks needing to be bailed out, that's when the Fed sprang into action, and QE was in full force. Where did they give this money? To the people that went bankrupt and lost their homes? No. To the people that needed the money the most? American citizens? No. They gave it to wealthy banks, who then capitalized on this, gave themselves huge, excessive bonuses. And so I think we can see, yes, I'm being cynical, but that is actually what happened. That is reality. So history will probably repeat. There's not much that has changed in U.S. politics since that time. People are still not only expecting this, but actually you have many minions out there that are big proponents and advertising for big government, big pharma, big banks, big insurance companies. I can think specifically of one party here in the U.S., and it's the same on the other side as well, but there is definitely a leaning towards big institutions by one party over the other, and many of their political minions are out there advertising and campaigning for this sort of behavior, which is a sick and twisted behavior, and it will only lead to the demise of the systems that we know. And maybe that is the intent after all. Who knows? Anyways, we have to keep our eyes on this housing market chart along with the Fed and the Dow. I think If history repeats, we continue to move up in the markets until we create our top, and all this lagging data follows later on. All right, so we have a whole year. Closing this chart out, let's see what else we've got here. Oh, I wanted to go over container rates. How far into this video am I? I'm sorry, it has been almost 4 weeks, so I have a lot of data. I've covered this before, global container rates. What we're specifically looking at is anything from China to the US, Shanghai to Genoa. I don't know where Genoa is. Shanghai to Los Angeles. That's this penguin. Look at container rates. Just dropping off a cliff. Shanghai to New York. All right. Look at this, guys. This is bad economic data. All right. We don't like to see this for the economy, but what does it mean for this? Is we try to use this lagging data, which is going to be factored into CPI data in the future, and to this deflationary data is something also that the Fed is going to consider. All right, so this is how we're using this data, is we're trying to utilize it to predict what the Fed's next response will be. Will the Fed pivot? Will they pause from their current campaign of most aggressive rate hikes in history, in fact? And will they slow this aggressive behavior down? I think the answer to that is yes. Of course, that is the way my bias leans. You may see it otherwise. This is just purely opinion and entertainment. I am not telling you or advising you what you should do with your money, and I'm not telling you this is going to happen for sure. It's just the way that I see it, analyzing all the data. All right. Container traffic to Los Angeles. You can see just another chart indicating the drop-off, falling off a cliff. And so those are 2 points of data that I also wanted to cover. This disinflationary data will be factored into CPI index as a lagging indicator, and it is something likely that will be considered by the Fed in the future. All right, another chart here I've got is Ichimoku, which I'm not always the best at either, just like Elliott Wave, but this is just another indicator. And I have here a chart that I posted several weeks ago again. And the main thing I wanted to highlight real quickly, COVID withstanding, the Ichimoku bottom has never been, or has not been broken since this cloud formation that I charted began in 2009. Again, secular bull run. All right, so I'm going to have to do a Control F5 to hard refresh this page, because I want to see what this is actually tracking the S&P 500. Yep. All right, so only time this cloud has been broken since our secular bull market began was, again, COVID, which is an anomaly. We can just throw out that data. It doesn't count. And here, when I posted this chart, actually, we were at the bottom of this cloud, and we have bounced once again. And so I didn't expect us to break down below that. In fact, obviously, you guys know I'm expecting a blow off top in the U.S. stock markets. All right, below this, I have BTC also charted. Now, my expectation was that BTC would follow the stock markets, and obviously I could not see the future with FTX collapsing, and we went the other way. This is, again, denoting the disparity between the price action of the S&P 500 and Bitcoin. All right. Another chart here. This is just tracking the volatility. We don't really need to do that. You guys can go to my profile on TradingView if you want to see some of these charts. Okay, continuing on down the line here. What is this? New one. Okay, I got to change the... yeah. This is what I want. All right, I thought I had some trend lines drawn here, but you can see the trend since 2011. And demand for new one-family houses sold. And you can see that we obviously have clearly broken a big trend line here and are below that. That's not good for the housing market, again. And if it's not good for the housing market, that housing market will impact the overall market as a lagging effect, possibly a year and a half into the future. U.S. housing starts, same thing. I've got some trend lines drawn there. We're below those trend lines, and that is entering into bearish territory. Consumer price for used cars and trucks coming down. This is a good chart to follow when you're tracking disinflationary data. It tends to do what inflation does, and inflation, we know, is coming down, and so are the prices of used cars and trucks. Energy coming down. Let me change this from bar to candles. All right, so we were in this channel, upward channel, for a period of many moons, actually since March of 2020, and energy has broken below that. We came back up, tested the underside of that as expected. Again, in one of my previous videos, maybe months ago, I did expect us to come back up and test the underside of that. We did that. Came back down, tested support, tested the underside of that one more time. Oop, we're good. Formed this M pattern, and here we are. We're on our way to another level of support. So I can expect us to bounce from here, test this level of resistance before possibly breaking through and continuing down. This is U.S. oil. All right, I'm just covering all of these, reviewing all these charts, guys, because it's been so long. So I apologize for the lengthy video. This is gasoline. We have come under this level. This is not a good sign since March of 2020. All right, so gas prices are continuing to decline. Now, it's good immediately for the economy. All right, so again, this supports the proposition of a blow-off top. It also supports the proposition of longer into, on a longer scale, a recession on the way / the big D word. I don't like to say it because I don't want to wish that into our future. Unemployment rates, all right, still low, but they will climb. They will climb, guys, as businesses are impacted by these rate hikes, and liquidity dries up in terms of obtaining cash flow. Expenses are going to have to be curbed and cut, and typically those expenses affect employees first. Okay, I don't think I really need to cover much more here. Let's see what else I've got. NASDAQ 100 stocks above the 200-day moving average. This played out exactly as I predicted as well. All right, and it's another good sign that what I've been saying is occurring. All right, we hit this level of support here and now have formed this W pattern and are on our way upwards. All right, to the moon. All right, so NASDAQ continues to fly. This is the S&P 500 stocks above the 200-day. Again, you can see clearly that W pattern, and we're moving onwards and upwards. Now, I do expect there is a level here. We'll come back down and probably test that level somewhere over here. All right, so I do expect a little bit of a drop. Again, I've said all this already. I don't need to repeat myself ad nauseum. Okay, what else do I have here? Interval is not supported. Inflation rate, yep, it's coming down. You can see it coming down. We know that. And the next one will probably come down even further. Again, all of this is weighing into what the Fed will do next time. Now let's cover some crypto. After 50 minutes of spouting on and on about various different topics, let's just do some technical analysis on crypto here. I'm going to zoom out to the daily. We've got our candle chart. So Ethereum is in this downward channel. We've been in this since November. Again, we haven't broken to the upside. All right. We broke to the upside of a strong support here, this purple trend line. And I was expecting us to break out and upwards in this channel. We did briefly, but then FTX happened. So now we're back in this channel, this downward descending channel, which is bearish. All right. So it's possible that actually I do expect Ethereum will probably come back down to $1,000 again before we break to the upside of this channel. And I don't think that's something that's unreasonable. In fact, I can see right here already. This is the daily. We zoom out to the 4 hour. Let's see what we get here. Yeah, so there is an inverse head and shoulders pattern. So we could break to the upside and test the top of that channel one more time before coming down. That's definitely a strong possibility looking at this chart. Should we break this neckline that I'm seeing on this reverse or inverse head and shoulders pattern? Do you guys see the inverse head and shoulders pattern? If you don't, I will draw it out here real quick. Shoulder, head, shoulder. All right, so we break this neckline here. We're going up to test that top of that channel again, and I'll zoom back out and show you what that looks like on the daily. After I erase this, let's zoom back out to the daily here. All right, we'll test that, and possibly the way the price action will go, we test the upside of that channel before coming back down to support. I don't know what big event is going to catalyze crypto to move down that rapidly again, but it could potentially be an audit on something like Tether or some exchange. I don't know. Something will probably occur to move us down to that level. Maybe it's just the market's dropping. Maybe there's a geopolitical event. I don't know. But I see that happening before we break to the top side of this channel again. Bitcoin, same thing. All right. So, in fact, this looks to be a bear flag overall on the daily. Let me just see if I can. All right, I'll put it back in auto. What I want to do, take it out of auto. What I want to do is move it up a little bit so we can have this full view into our focus. All right, here we go. So again, I do see an inverse head and shoulders pattern. All right. But that does not mean that Bitcoin is out of the woods. All right. So you can see the neckline right here, even on the daily. I could zoom into the 4 hour, but I can spot it already on the daily. Should we break, we will break to the upside of that. And we would test this resistance here at 17,300 before proceeding further down. Because this overall is just a bear flag. This whole area right here is just a bear flag as far as I can see, unless something catalyzes us to continue moving up. I just see that as a bear flag. And what does that mean? That means we come back down. I was hoping this whole area up here was a test of our longer term. Let me put it back in auto and I'll zoom out here. A test of our breakout of this longer term descending wedge, which is very bullish. You know, when we break to the upside of this, I thought the bulls were in full force, and I was hoping that this whole area here was a retest of the top of that triangle, because we like to come back and retest previous resistance as support, right? So you can see this support zone. We kind of slid down this triangle for at least a week, and here we are. But we broke to the top side of this bullish wedge, broke to the tops, and then FTX happened. And now this looks, to me, that just looks like a big old bear flag. And again, if I'm correct on that, and that is a bear flag, then we're probably going to come down at this point to test the top side of this support zone. Where will that end up being? Way down, actually, around 10,000, guys. believe it or not, around 9 to 10,000 is where the top side of that triangle would be, judging from the time frame. All right. So we have to keep our eyes on that and continue to expect bearish behavior in the crypto space. And it might not be that it happens like that, but that is also why much of my portfolio, I'm just hodling right now. I'll just hodl right through that. All right. And generally, you want to have cash set aside. I'm still paying my capital gains from last year. It was just enormous. And a lot of what propelled me to do it the right way and do it honestly was publicly doing this channel. Not that I would have done anything differently. It just, I was making a lot of money. Also, I am in the public eye space. So I want to make sure that I'm above board, and my capital gains tax was enormous. I'm still paying that down. So I don't really have cash reserves set aside. I could obviously take out, a loan or do something like that, but that's not a wise way of investing unless you know for sure that's something, and you just can't. You can't with crypto, as we can see. And a bear market is just brutal. You can be wrong a lot of times before you finally get it right. Overall, the trajectory of crypto is upwards, but we are definitely in a bear market here, and now that the price has separated itself from the U.S. stock markets, I think there is further room for us to travel lower and possibly could get all the way down to $10,000. I'm not, again, saying that will happen for sure, but so far, this is what the charts are indicating, and have to be honest with what I'm seeing. And I have traded with, on technicals in the past, and therefore my trading portfolio right now, I'm holding about 75% in Ethereum, Bitcoin, and Ripple. And that's fine. I'm not going to sell it now, not when we're just moving sideways. And we can't know for sure that we're going to drop lower either. So I'm just going to hold on to that and dollar cost average in with the rest of the portfolio as we travel lower. All right, guys, that is the sum and total of updates and reviews that I want to do for this particular video. Did get rather long in the tooth, an hour-long video. Hopefully you guys can find a way to listen to these things. I have several apps on my phone where I can just, close the screen out and listen to YouTube videos in the background. And then when I want to see something on the charts, I can just open my phone again and see what the video is detailing. Those apps cannot be found on Google App Store, of course. They hate that. YouTube doesn't even like that I'm talking about this right now. And I'll probably get tagged for mentioning them, but I'm going to mention them anyways because I just don't care. YouTube has been censoring everything anyways. Who knows if I'm going to say something the wrong way and get just dropped from YouTube. And I know the things that I can say if I intentionally want to disappear from the interwebs. And I have those in my back pocket, and I'm ready. If I ever want to quit doing this and you guys see me disappear, know that the last video I made, I did that intentionally. It's just an easy way to delete all my videos. Rather than go through every social media channel and delete every single item, I can just say the wrong thing and have it all disappear. Isn't that great? That's the positive of censorship. All right, so two apps that I use is NewPipe. You can find that on F-Droid. That's another app channel that I use. Yeah, F-Droid is an app channel that I use. You got to be careful with some of the apps on there and make sure that they are vetted and coded correctly, etc., etc. The F-Droid is a fairly trustworthy app store. If you're going third-party app stores, it'd probably be the most trustworthy of the third-party, but not everything can be trusted. All right, so but I do use NewPipe, and I get that off of F-Droid. And then there's another one that I downloaded separately. The coder is from Ukraine, And so there was a period where he was, obviously for obvious reasons, was not able to update his code, but he updates often. This one takes out advertisements. Just like NewPipe takes out advertisements, and you can run it in the background on your phone. So I can turn off the screen on my phone and it'll continue the audio. Another one is SmartTube. That takes out all the advertisement content, but you can't run it in the background. Now I use SmartTube to put on like my Amazon Fire Stick, so most of the content that I watch is off of YouTube anyways, and I just hate all the advertisements. So I send it to my Fire Stick, cut out all the advertisements, and I'm good. And I'll just watch YouTube all night, no advertisements. That's what I use SmartTubeNext for. NewPipe is generally what I use on my phone when I go to the gym and listen to these long extended YouTube videos. I like to put it in the background and use it, kind of as a podcast. And then if there's a chart or if there's something I want to see, I just open up my phone screen and I'm able to take a quick view of that. Okay, enough rambling. Hopefully this was helpful, guys. After a long intermission of not providing these updates, I do believe it was probably worthwhile going over all of this historical data once again. Wish you the best, guys, and we will talk to you in the next update. Peace, y'all.